Hi there, my name is Matthew Goldsack, Head of Investment Solutions at BT Funds Management, the investment arm of Westpac here in New Zealand. In this update, we wanted to share with you our views on some of the key drivers behind market returns for the first 3 months of 2016. So overall, the March quarter was a positive one for diversified investors. Most asset classes performed reasonably well despite a lot of volatility, particularly at the start of the quarter. Share markets around the world were a little bit mixed overall. However, the New Zealand share market was a standout performer, gaining almost 7%. Now, this comes on the back of a 13% gain in the December quarter. Bond markets also generally performed quite well, with long-dated bond interest rates, particularly for bonds issued by governments, falling during the period. So if we look back on what was driving performance, the start of the year started on a weak note, with many global share markets hitting bear territory. So this means a fall of around 20% or more from a prior peak. The end of 2015 and the early part of this year saw investors become increasingly concerned about the outlook for global growth, which has slowed, and the possibility that the US could potentially head back into recession. So slowing growth will tend to have a negative impact on company profits, and therefore we had big investors dumping their holdings in risky assets. So these are shares and listed property, and piling into safe haven assets such as government bonds. As it turned out, those concerns were proven to be a little bit overdone. So data releases showed that the world is expected to grow at a reasonable rate this year, and the US is very unlikely to fall into recession. We also had some positive central bank action during the quarter, which provided some comfort for investors and supported risk-taking. The US Federal Reserve in March said that they would not raise interest rates as quickly as they had previously indicated. Meanwhile, back at home, the Reserve Bank of New Zealand surprised the market by cutting the official cash rate by a further 0.25% to a record low level. Now, it's possible that further interest rate cuts are likely during the course of this year. Now, we've noted in recent webcasts that the backdrop for financial markets and economies is a little bit uncertain, and valuations across lots of asset classes remain high relative to history. This year we've seen volatility across markets much higher at times than in recent periods, and we expect this to continue to be a feature of markets during the course of this year. In this type of environment, it's important that investors remain focused on sound investment principles. So this involves ensuring that your portfolio is well diversified across asset classes, securities and industries, owning quality financial assets, and ensuring that your advisor or your fund manager is actively managing your portfolio's exposure to market risks. Thank you for your time. If you'd like more information or would like any financial advice regarding your particular financial situation, please contact a Westpac financial advisor.